Hey everyone, I hope you guys have had a great day of trading. Just going over a quick trade that I took here. Wanted to explain the whole standard deviations, the change in the state of delivery, go over that with you. I made a previous video talking about the T-Trades indicator. I'm not using it, but I'm using the same functionality as what it does, and it's basically based on the premise of the swing point being defined. You can see a lot of videos out there that talk about this now. It's another tool, if you will, that I've kind of added to my knowledge about trading. It's very powerful, and like I said, I'll go over that and why it is. And anyway, so let me just jump into it. I feel like I'm kind of babbling here. So in this trade here, I've got the 1 minute on the right, I've got the 15-minute chart, or left. I've got the 15-minute chart on the right. If you guys have been following me, you know that I'm a huge proponent of creating and marking up the higher time frame imbalances. So I've got the 4 hour, I've got this 1 hour kind of overlaid, I guess under that. I got the 4 hour, it's really on top of that. I've got a 4 hour here, got my 1 hour, and then of course we've got all-time highs sitting way up here. But you'll notice I have found, just with being on the charts for some time, that price will react very strongly, very strongly to a 4 hour imbalance and also a 1 hour. We usually get some kind of rejection and then a reversal that takes off after that. Sometimes you'll find you'll get a rejection, it'll bounce back up a little bit and then continue through. But it's always, you gotta always, guys, keep in mind that you're always going from external range liquidity to internal range liquidity, and just back and forth, and that's all the market does. And so, again, depending on what time frame that you're on, you can utilize this to your advantage. Let me jump back to my 1 minute chart here, and I'll show you the ideal setup that formed a little bit ago here. So I had this 1 hour / 4 hour area set up as an alert for me, and when price continued to come up here and when it hit this area, I'm anticipating some type of reaction to happen. It did. I got the ideal scenario, which is on the 15-minute candles that you're looking at. You've got a sweep basically a sweep of the previous candle and then a close beneath. If part of this candle was still up here, just imagine, like, half this candle still up here, then it's kind of iffy, like it can possibly turn, or it can keep going. But the fact that it swept it and then came back down and closed beneath it catches my eye big time. I began to watch price action at that point to see what it was going to do. I went ahead and just marked up my standard deviations. I marked up the change in the state of delivery, which is this X here. And then of course I also created another video previously where I talk about just basically mapping out the T spot here, which is essentially what the trades or T-Trades indicator is doing. So everything kind of fell in place here. I marked out the standard deviations. My take profit, just because it was kind of late in the afternoon and price action has been a little crazy today, I got out here. But you can see, ironically, how it came down right to the 2 and 2.5 area and then turned back around. But again, if you're looking for kind of the ideal scenario, what you want to do is, depending on what time frame that you're on, because you want to make sure your time frames align, and there's a whole other tons of videos on time frame alignment. I'm not going to go into that now, but what I was using here is, since I'm on the 1 minute, I'm looking at the 15-minute candles. And again, what I'm using for these guys is I'm using the ICT higher time frame candles by Fatty. Usually have the 1 hour displayed as well, but because we've had such a crazy day in terms of price action, I don't want to bring my monitor, way down to do all this. So I've simply turned the 1 hour off for right now. But again, ideal scenario, we went up to the 1 hour, came down off of it, and then got our change into state of delivery, marked out their standard deviations, and then, you know, jumped in the trade from there. And again, you could be looking for liquidity. You could be looking, I mean, you could get out, not really here, but you could, you could target here, you could target here, any of these areas down here. You could also shoot for down here if you want. I thought this was a little bit far-fetched, because I still think NQ is going to try to push back up some more, since we just bounced off the daily imbalance today. And that's essentially, let me get back to the 15 here. That's essentially what this area is down here. We went through it, went to this bottom of the 4 hour here, rejected, but if you go up to the daily chart, you can see that we came inside the daily fair value gap and then turned around as well. So lots of confluences for the reversal here, but just wanted to emphasize that if you're on the lower time frames, whether it's the 1 minute to 15 minute candles, if you're on the 5 minute chart, you should be looking at the 1 hour candles. But then again, you know, you can also, like I do sometimes as well, as I'll have all three of these guys on. And then most of the time, yeah, you can see it kind of a mess here, but then most of the time, when I'm on the chart with all three of them on, I'm on the 5 minute until I see some type of reversal or potential tap into an area or a potential swing point form. You know, lots of things to look for there. Let me just get this mess back off of here. But anyway, like I said, the point of this video was just to highlight and stress the ideal reversal swing point here on the 15-minute candles. You want that sweep, and then you want that close beneath and back inside that previous candle. So, you know, from there, mark up your standard deviations, mark up your change in state of delivery. You can see how it respected the T-spot, which is essentially the 50% EQ area of this candle, just as long as you know, it respects that area. The next candle is what I'm referring to, as long as it respects the 50% area and doesn't go over it or close over it and continue down. That's essentially what all this is right here. So again, looking for liquidity on the left, as well as keeping the standard deviations in mind. Pick your target, take your trade, play it safe, and then hop back out and get on the sidelines and wait for the next move. So anyway, like I said, just wanted to go over this trade, and it's this concept is very powerful. The concept of the swing point, the concept of the reversals off the imbalances. It's helped my win rate shoot up dramatically. It's helped me to be patient. Kind of, you know, it helps me to establish my own rule set in a sense. So that way, if the trade doesn't form, if the setup doesn't form, you know, I'm on the sidelines. That's just how it is. I trade fair value gaps. I also trade order blocks. I've been trading order blocks a lot more recently in the past 6 months. I just feel more comfortable with those. Look for that change in state of delivery, set your stop loss, and then let it run. So, but anyway, like I said, just wanted to go over this video. Wanted to go over the sweep that was formed, the ideal trade here, and hope that's helpful for you guys. So, trying to keep it short and sweet. All right, yeah, I'm under 9 minutes, so I'm gonna go ahead and close here. You guys have a great rest of your day, and good luck everyone in your trading. Have a good one, guys.